No.
Have you, if you haven't started
Yeah,
yet?
I did.
Oh, well, hey, welcome.
Hello.
I was gonna say
Um,
something to you, but I won't. We'll
that's all
save
right.
it.
You can put it in the chat. All right, we're live. We're live here on all the socials. We're getting our communication channels mixed here. All right, let's get started. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with my good friend Doug Hagerin. Hey, Doug.
Hey, again to everybody. Good to see you. It's, start, restart. You can't be greeted too many times. So welcome.
A
Happy
warm
Friday.
hello is always welcome. So yes,
Hello.
all good. Cool. Well, let's just dive right in. I've got a lot to talk about. A lot has gone on last week. Those of you who are sleeping, good luck. But yeah, I mean, pretty much. A week ago, the last Saturday, we had at the Trump rally. We had the assassination attempt, which glad that I don't know how he survived, but I'm glad he did. That's just one of those things that no matter which party you're on, you don't like to see that. Violence has no place in America, so it's just a despicable act, and let's hope that doesn't happen again. It's not the first time it has happened in history. Go ahead, Doug.
I just want to say something which I think is kind of refreshing in this regard is that whether you're pro Trump, against Trump, anybody that's coming out making crass jokes or I wish this would have happened, they're all getting canceled. Doesn't matter. Real humans are stepping up saying, look, this is bad, right? I mean, so it's appreciated to see that, like a couple people out there have made some jokes and stuff about that, and it's not going well for them. So let's take this seriously, that anytime someone is shooting someone at someone, especially, again, not especially, any human, let's be serious about this. We talked about this before. Life over politics.
Yeah, I totally agree. And just something that somebody pointed out, which that was interesting, which was, Alex Jones got fined like $1 billion for, basically promoting conspiracy theories. You could argue whether, he was convicted, so that is what it is. But how about the news stations that are propagating conspiracy theories right now? Are they also going to get fined for $1 billion? Just kind of makes you wonder, right? Anyway, moving on. So that happened, and immediately as soon as it happened, one of the first thoughts Doug and I were texting was, "Wow, we have the next president of the United States." I mean, surviving that, like that's going to rally people up, and it looks like that's the case. So we'll see. A lot of conventions ahead. The Democrats have a interesting slate ahead of them in terms of what happens. Who knows if Biden's going to step down or who's going to step up, but if nothing else will be interesting, I don't think the Democrats have much of a shot here based on the numbers and the polls. And this has nothing about politics, just based on what people are saying, that there's really no one who has a chance. I think probably Kennedy has a bigger chance of beating Trump than anybody in the Democratic slate right now. So that is what it is. But here's the moral of this story. No matter who gets elected, nothing is going to change. So I think we as people, as investors, like to think that politics plays a large role in investing. And if you look back at history, if you look at the statistics, politics has almost nothing to do with investing. Or let me reframe that. Investing performance. If you look back, I saw a stat the other day, I think we shared it on another show, where if you look back X amount of years, 50, 100 years, the Democrats and Republicans, depending who was in, the returns were almost exactly identical. So, I've seen this statistic before, and obviously it depends what year you're looking at. But in general, it doesn't matter who's in office. So the takeaway is, doesn't matter who you like, doesn't matter who you hate. It doesn't matter who gets elected, because we're never going to know until it happens. But what we do know is it shouldn't affect your investing. So if you're one of these people who thinks, oh my God, Trump's going to win, I'm going to move to another country, I'm going to sell all my portfolios, and go live in a cave with my MREs and my guns and gold, unless, of course, you're a Democrat, in which case you're not living with your MREs and guns and gold, because that's a Republican thing, but you're living out in the woods somewhere, right? and in some Argentina or some other country, right? And Republicans, when they go, they say, "Oh, we're gonna leave." Everyone says that. I actually would love it if those people just left. Like, why are you even saying that? That's like such a stupid thing to say, unless you're actually going to do it. The celebrities said that constantly in the last 20 years, and they never left. I wish they did. Um, you get rid of these cuckoos who think that leaving the country is the best solution, right? If you don't like it, stay here and disagree and debate. And that's the whole point of this country: is we all disagree with each other, but we come to a consensus based on the shared values that we have as a country. So don't leave, stay and disagree and have your thoughts heard, right? People disliked when Elon Musk took over Twitter because he said, "Oh, it's going to turn into everyone has a say." Everyone should have a say. That's what that's what the First Amendment's all about. Is everyone has free speech. And what happens when you have free speech is that there are good ideas and there are bad ideas. People don't want to hear bad ideas. But the reality is bad ideas are good to hear because you're going to immediately know they're bad, right? And if you're in a town square and everyone's talking and bad ideas will get drowned out by good ideas, because people are going to step up and be like, "That's crazy. Here's a better idea." Great. Now we all can agree this is a better idea and let's move in that direction. But when you don't let ideas happen, now all of a sudden you drown out potentially good ideas because some person says it's cuckoo and no one else has a chance to discuss it. So we went through that trend for over 10 years, and I think it's going the other way, which is good. It's good for First Amendment, it's good for truth, and it's good for coming up with better solutions. Now, I do want to say one thing, and we'll get it to Doug here, is that we've been talking about this on the show a lot in the last, for a while, actually, for the last few years. We've been talking about cheap, clean energy. We've been talking about nuclear as the best source of cheap, clean energy. And we mentioned on the show a few weeks ago that the Biden White House actually signed a bill into law that is promoting the quicker regulation or the getting rid of the red tape for nuclear power plants so they can start up quicker. Because it can take like 20 years to get a nuclear plant up. And that's way too long. Here's the problem. So we were aware of this and we talked about this in the show, but it seems as though the news has finally caught on because they're really quick to the draw. That here's the problem. Silicon Valley has known this too, is that AI eats up an enormous amount of energy. People were complaining about Bitcoin. I don't know if you remember this, Doug, but I remember a few years ago, people were like, "Oh my God, Bitcoin, it's not clean energy. We're gonna dirty the planet because of Bitcoin," which is such a bunk statement to say. But people said it because someone told them that Bitcoin's bad and we should crap all over Bitcoin. Now, if you look at AI takes up exponentially more energy than blockchain or any of that stuff. It is actually sucking up most of the energy, and as it continues, it will suck up almost all of the energy if we don't come up with solutions. And tech is aware of this. And yet, at the same time, we have a technology that is eating up all the clean energy, and no one's talking about it. No one's saying we should stop AI because of, clean or dirty energy. So that's got to make you think. Who's in charge of your thinking? Because this is a clear understanding that AI takes up a lot of energy, which means at the moment we don't have enough clean energy, which means we're going to be burning more dirty energy. I'm going to be really crystal clear. If we can't come up with enough clean energy because we only have a certain amount of capacity, and as AI increases and the energy capacity increases, what's going to happen? Well, we've got plenty of dirty energy we can burn, plenty of coal, plenty of gas, plenty of this other stuff that people don't want. Well, that's the only solution because we didn't want nuclear. So all you green cuckoos out there that were against nuclear because I don't know why, no one came up with a good reason, but it was somehow co-opted in the movement. They didn't want nuclear. You've ruined it for most people because now we're going to have to burn dirty energy in order to support AI. So what is the potential outcome here? Well, we could throttle AI, which is not likely going to happen because it's the cat's out of the bag, and you're not gonna put it back in. Another way is you could actually speed line, put it in the fast lane for nuclear, which is possible, but it still takes time to build. You can't just build this stuff overnight. It takes time. There is regulation which is needed, right? It's potentially dangerous. So you need to have all that, but government oversight in large part is what is throttling the progress. So there is a lot of stuff that can come out quick, but not quick enough. So we have a problem, and it's public that this is a problem. Tech executives are coming out and talking about it. And the problem is this: if you have AI, it takes up an enormous amount of energy, right? In order to run, like Nvidia is the biggest chip producer out there, but it takes enormous amount of energy to run those chips for AI. Here's the other thing: it also requires a lot of servers and server farms. And I don't know if you've noticed this, Doug, but there's a large amount of institutional players buying up these server farms. People need to put this data somewhere. These data centers are sprouting up, and they can't build them fast enough. So the two trends right now that you should be aware of are data centers, and there are some public companies, and energy. This is going to dwarf everything because this is extremely important. We are past the point of we can fix this. We need to come up with a different solution, because nuclear is a great solution, but it's not going to get there quick enough. We don't have a solution that'll get there quick enough. So the reality is we're not going to be able to support the energy needs of AI. So at the moment, that's the problem. Not saying there isn't a solution, saying that's the problem currently. We also don't have enough data centers. We're also getting more of that. So if you want to invest, those are areas you should really put your Sherlock Holmes hat on and look into closely, because that is where the growth trends are, and that is where the need is. And the need is intense. So Doug, I don't know if you've read these, but we're seeing a lot of this. What have you been seeing?
Well, I think, one thing I mentioned to you last week or earlier this week is that Constellation Brands, who is actually the owner, took over as the owner of 3 Mile Island. You might remember the name 3 Mile Island, Kirk. Had a little bit of influence on Americans' opinions of nuclear, right? I mean, Chernobyl was obviously the massive disaster before Fukushima. But 3 Mile Island scared the bejesus out of Americans, right? Because of their meltdown that they had. Well, it wasn't the major disaster that was obviously experienced through Chernobyl and Fukushima with the total meltdown. They actually continued to have the 3 Mile Island plant continue, and as a matter of fact, it continued to produce energy up to 2019. And they shut it down. They did not shut it down because of the fact that it was a risk. They did shut down the one reactor years ago, but the other reactors, I forget how many they had, were continuing to run. They actually shut it down just because the demand fell. They couldn't keep up with the profitability of running this reactor. Well, guess what? Constellation Brands hasn't made a final decision, at least as of last data that's coming out there. But as of July 12th, they did actually, petition to get the right to start to producing on that again, because they need to have the energy. I mean, they're looking for new energy sources to be able to meet this major demand. So yeah, I mean, when we're going out there and we are restarting old reactors built on old and technology, that the new reactors that you and I have talked about that they want to create don't have the same risks as the old reactors. They want to go back and restart old reactors to create that have been shuttered since the last 5 years. It's telling you clearly there is a demand for energy now. And I know you've got some information, some sources up here that chart that shows the global primary energy consumption by source. There's actually some really interesting charts that show kind of how we've transitioned through energy sources over the years and how that's gone between one or the other. Clearly right now, and you can see, and it's not gone anywhere fast, is that, look at that chart. I mean, yes, we have the greatest amount of renewable resource energy that we've ever had in the history. Since we started mining for our own energy. And yet, from when you look at how much that's grown, you could argue it's become a decreasing amount of percentage of that energy source compared to the traditional energy sources that we've used: coal, oil, and natural gas, nuclear. All of those have exponentially grown from the 1950s. And while coal has not necessarily expanded at the same level, it has still expanded. It has tapered off, from the 2000s, as we have looked to utilize different sources to fuel. In most cases, coal has been electrical energy, but look at the expansion of oil. It's not like we've replaced fossil fuel energy. We haven't gone away from coal. Oil just took a greater and greater share of it. Natural gas just took a greater share of it. So again, they may have been 100% of the sources, in 1950, but they're still easily, looking at this and rough guess, they're still easily 80 to 90% of the energy that we're getting. So yeah, renewables have absolutely hit record usage, but so is every other category. It is not reducing the use of fossil fuels by any means.
Yeah, I mean, I wanted to put this chart up because I think it's a great illustration of where we're going. And I mean, look at this: the 1950s. I mean, you had this exponential rise in energy needs, right? We have this split here, which obviously is important, but also think about the energy needs, right? This is prior to AI. And if you look at this curve, this obviously looks exponential because it keeps doubling and doubling and doubling. Once you introduce AI, you're going to have another exponential growth from even here, because the amount of energy it's taking and is going to continue to take because of the chips that are created that require a massive amount of energy, this is going to keep going. Now, they could come up with technology that make it more efficient, and here's another thing to keep in mind. Everyone, every once in a while, this Malthusian kind of thinking takes hold. So I remember, I think it was in the mid aughts, or maybe early tens, that people had this Malthusian thing, like, we're going to run out of energy, we're going to run out of oil, and it was like, oh, the world's going to end because we're going to run out of oil. And then what happens? Oil became really expensive, and then people came up with a new technology, fracking. Fracking was invented because it was really expensive to go for oil. Now, people don't realize this, but since oil was really discovered and used, wells were drilled. But you didn't get all the oil. You might have gotten like 20, 30, 40% of the oil. There's still a ton of oil down there. You just didn't have any way to get it. And so the technology came up of fracking and allowed these oil companies to go back to the old wells and drill them again and pull out more oil. And the U.S. has a tremendous amount of oil under the surface. So it also has a tremendous amount of natural gas. So the natural gas came out, and there's a ton of it. They're literally flaring it because they can't use it all. There's so much of it down there, it's not even funny. And so when you look at things like natural gas, that is it's certainly carbon energy, but it's clean, right? It's a cleaner version. So it's more preferable than oil, but our technology is not. You don't run your car on natural gas, right? And it's also kind of dangerous to do that. But you don't run your car on natural gas, right? So there's a lot of technologies that are not built on natural gas, even though it's potentially better than oil. But if you look at the usage, and you see that when we get to these points where things get really expensive, all of a sudden new technology comes out and makes it cheaper. Same thing applies everywhere. So because of the fact that we have this energy crunch ahead of us, and if you think the California blackouts are bad, and they're certainly not good, we always joke on the show and how they came out and said, hey, everyone needs to have an electric car by the end of 2030. And then the next day they came out and said, everyone, please do not charge your electric cars, or running out of energy. It's not even close to having enough electric cars. So the point being, I mean, California's a mess, so let's go past that. But the point being is, you have this energy crunch. You have a higher demand, people want electric cars, although there's problems with that, but a lot of people want electric cars, um, and we want clean energy, and we have AI, and we've got all this stuff that just keeps increasing. Right? Technology is going to have a bigger and bigger need for energy. More and more of our life is going to be, basically based on electronics, like your refrigerators and everything is more and more electronics, which means more energy. And you have AI, which is eating it all. So as we increase, we need to address this. So if you want to look at big trends, and this is a huge trend, look at how to invest in energy needs going forward. In my opinion, nuclear is the best. Look at things like uranium, but not even just uranium, because there's going to be reactors that'll be powered on things other than uranium. So look at these energy companies, figure out how you can invest in the nuclear space, figure out how you can invest in data farms. There are some public companies. Offhand, I have to go look them up, but there are some public companies that allow you to do that. And but look into some of those trends. Those are really big trends, and that trend is not going away. So, what do you think, Doug? Is that the right path, or should we be looking elsewhere?
For different energy sources,
Well, just trends.
Yeah, no, I think I think it's the absolutely the right path. I mean, the demand to create. I mean, whether we're talking about heating, and or cooling, right? And whether you agree with it or not. I mean, for whatever the reasons, whether it's weather or whether it's climate. I mean, we've hit some exceptional levels of high temps across the country this year in certain areas like Death Valley. Guess what? That's an energy center, because how do you, when more and more of the population has migrated from cooler climates, right? The northern, north of the United States, for example, down to southern climates. You look at where the greatest amount of population growth has been in places like Texas, places like Florida, places like Arizona, Atlanta. All of that, we're not just talking AI there. We're talking about the impact of the electrical grid and energy consumption that has spiked just in trying to create climate control, right? And you're seeing more of that in other areas, of the world, in terms of, South America, Central America, and anywhere along those tropical zones. They're starting to get, as they, here's the other thing. Forget AI for a second. As the world continues to get a greater amount of growth in the middle class, and you can argue whether or not the American middle class is being eviscerated, but throughout the rest of the world, the middle class is growing, right? As that middle class continues to grow, they are going to demand more energy for things like comfort, right? Air conditioning is becoming something that is in more demand in many, many parts of the world, or more accessible in many parts of the world. But they're also getting access to these. They're getting access to computers. They're getting access to AI. People are working more remotely. They're putting greater demand on their own personal residential energy grids. So now that's expanding things outside of those central commercial areas. Now, I think that it again, we're seeing today, as of the start of this, this day in which do some, for whatever reason, I believe the word is out that there was a software upgrade that's creating outages for Microsoft and another entity, that's got hit hard today all over the world. When we take a look at the impact of that, we're talking about the fact that technology runs everything. CrowdStrike. So we're talking about the fact that energy runs everything. Everything we do is getting more and more under the demand of energy needs. And so, yeah, maybe the end good is going to be, the end goods created are still going to be places to invest. But in order to create those end goods, and in order to create the economies of scale that have nothing to do with end goods, which technology eliminates in many ways the needs to produce those end goods. I mean, there's some great data about how many different things have been eliminated just by the advent of the smartphone, right? Technology, energy, and it's not going away. And you look at 140, what was it, 100, going back to the chart, 140 thousand terabytes was what they were at in if in 2000, and now it's 180,000 terabytes. I think if I looked at that chart correctly, you take that back, and like you said, NVIDIA spiked over the last 18 months, right? I'm reaching down, I'm feeling the warmth of my computer because guess what's running? NVIDIA. And I'm burning energy to do this. We're burning energy as we go more video, right? Video takes energy. As this spike has occurred over the last 18 months, and really since ChatGPT came out, boom, we've had AI in one capacity or another for decades. But to the extent that it has come out since the average public has had access to AI through, OpenAI, the exponential expansion over the last 18 to 24 months has been incredible. And if you don't think, we talked about this a little bit last time in our conversation, AI was supposed to go live, right? 2035. Okay, that 2033, 2035. That was basically the day of singularity. That's been moved up. And what did you say, Kirk? It's now 2020.
It's 2029, 2030. Depends on who you talk to, but it's moved up. Yeah, Elon Musk and Peter Diamandis, I think, said it was right around 2029. I think.
And I firmly believe that if they're saying 2029, 2030 now, remember, exponential means faster and faster and faster. So if it moved to 2029 and we start to get that exponential growth, keep that date flexible because at this pace, I think it'll be sooner.
Yeah, it's interesting. I mean, we'll see what happens because I think the reality is AI is throwing that monkey wrench in. It's going to speed it up, but it also, like we were talking about, it requires energy. So we'll see if it can meet that demand. I mean, it's TBD. I think we have I think in this country in the past, we've been really good at strategically doing things because we need to. So we have a problem and then we come up with solutions to solve it. They're not always good solutions, but we come up with solutions to solve it and people run around and try to do that. And because we have a air quotes free market, free-ish, it allows people to take advantage of these opportunities, right? So if I see this problem, I go out and I create something new. I can benefit from that. I can make lots of money because I came up with an idea that really propelled this country in a good direction, right? If you think about like what Elon Musk is doing, trying to get to Mars, I mean, we had NASA, which is basically the only thing putting people into space, and now we have multiple companies putting people into space, and Musk wants to get to Mars, and kudos for him for doing something that is going to change life on this planet and our species potentially. So, that happens because there's a need, right? Everyone was afraid that we're destroying the planet and hey, let's go find another planet to destroy, Doug. But anyway, so there's actually a few things that I want to kind of share here. So Doug and I were talking before the show about some chart crimes. I'm going to share a few of them. First one I'm going to share is this one. We don't like to talk politics, but it's who will win the 2024 presidential election. It has Trump, Biden, Kamala, and Gavin Newsom. And it shows that even before last Saturday, the events were Biden, I think it was after the debate, the poor showing the debate, he just fell off the cliff. And Kamala's chances increased. Newsom didn't budge. What's missing here, Doug? There's something really big missing in this who will win the presidential election. Do you know what it is?
We'll start with RFK Jr.
There you go. There we go. Chart crime. Who's missing in this running of the election? RFK. He's also running. He's not in this. So I always love ripping on politics, and I don't like talking about it, but I love ripping on it because it's so easy. And I come back to the point of when Ron Paul was running for president and the media blackballed him. They didn't even talk about him. And Jon Stewart did a great skit on like, where's number two? Like, it was just like showing all these vignettes of all these little clips of the media and no one's talking about them. And it was just hilarious bit. So kudos to Jon Stewart on that one. But if you look at this, he's not in there. Chart crime. Well, how do we know what the numbers are if he's not in there? Now, I would agree if you don't include him, this is probably what it's going to be, even though this is about a week old. But regardless, this is something that would drastically change with RFK. I think RFK's we got a better chance of winning than anybody in the Democratic Party right now. So I'd be curious to see this if that was there. Now, I'm going to share some other chart crimes because I don't want to leave it on the political note. Here's another chart crime. The total happiness score in the U.S. What's wrong with this one, Doug?
Well, it's saying Minnesota where I live, so that might be. I know, and again, there's a lot of happy people that live here. Well, Hawaiians for sure until they have to pay for anything. You tell me what's missing on this one, Kirk?
Well, a lot. First of all, how are they calculating the happiness score, Doug? That would be my first question. Okay, this is interesting. How are they calculating it? If you'll notice, there are no footnotes on any of these.
No.
There's no footnotes. It's just happiness scores, states, colors. Hey, it looks good. Oh, I see my state on there. Yeah, that looks about right. I mean, this is like the worst chart crime ever. It's just a bunch of colors that people randomly picked out. They threw numbers on there to make it look official, but there's no notes. There's no who did this. It's just like one of the worst chart crimes I've ever seen. And to boot, I know who created this. And whoever created it was most likely a Democrat, because all the Democratic states are the happiest and the Republican states are the top unhappiest states. Now, I don't know if that's true or not, but let me just pose something to you. If Texas and Florida, one of the biggest recipients of people who are leaving other states, are not in the top happiness score, there's something wrong with this poll. If California is a happier state than Texas, then why are people leaving California for Texas? That's all I got to ask. I'm not saying that that's correct or incorrect. It's just a question you got to say, isn't that interesting?
Well, and I'm going to say clearly nobody's had Columbus pizza. I mean, Ohio's kind of mid-range on here. I mean, just one bite of that, it's going to move up.
Yeah, I mean, when you have Maryland and Utah, California, Idaho, Minnesota, and New Jersey, those are the top states for happiness. And Hawaii, I'm sorry. Hawaii is the top. And you have some of the lowest. Tennessee is one of the lowest. Really? Because Tennessee has had a flood of people going to it for like the last 15 years. They're not going there because they're unhappy.
And everybody I know that's gone there loves it.
Yeah, exactly. So chart crime, that's probably the worst chart crime of the day, but I just wanted to point it out because it made me laugh just by seeing it. Like I said, if it was a mix of Republican, Democrat, I'd say, okay, but it's clearly one-sided. And some of the worst proponents, I mean, if you got New York on there and New York's not in the lowest and California the lowest because everyone's fleeing the state like rats from a sinking ship, you got a problem there. All right. Another chart crime. This one, I'll let you talk about it, Doug, because you were nice enough to bring this, and I want to let you share it because we have another one to follow it up. So
this is a chart crime by someone who I'll remain. Let's see, it's posted on here. I don't think it's on here, so I'll remain nameless because they're exceptionally good at chart crimes. They will post everything, but this chart is a comparison of the correlation between NVIDIA and regional banks. Because when I'm thinking of investing, I'm constantly thinking about how AI chips and regional banks compare. It is the most. First of all, we don't know the data. It's coming. There's no citing of data in here into comparison. It goes back how far? 2 years, which of course is not giving you a lot of time to show long-term correlation. And personally, I don't care, because if I'm going to be looking at a sector, I'm not comparing the performance and the correlate. We've talked about regional banks. We have plenty of things to say about the health of regional banks, but the last thing that I'm going to do is compare one company that is in a sector completely unrelated to a random correlation against a completely different sector that is now not just one company, it's a broad basket. I don't even know where to go. It's a useless chart. I don't know if I call it a chart crime as opposed to why. Basically, just put a big gold capital WHY, because there's nothing here to be gained from it whatsoever.
They should compare it to Timberland. How about that? That would be a good correlation, because that might have less correlation than banks. Yeah, that's about the.
I mean, yeah, I Nvidia to farmland, I think would be an excellent correlation. Or exactly how is Nvidia doing in comparison to stamp machines? I mean, it's like, I don't know. It's the most useless. And of course, we're comparing the correlation over the last 2 years, where all of a sudden, I guess, regional banks were doing a lot better than Nvidia. So I don't know what's telling me that things go up, things go down. I don't know. It's horrendous.
So what was the other chart crime you wanted to share? I was trying to figure out from your
Well, it wasn't really. It's not really as much of a chart crime, but I think it's more of an indication of a better chart. So you posted something from the Global Markets Investor. 3-month correlation between S&P 500 returns and the number of S&P 500 stocks advancing dropped to the lowest on record. So, the thing that I really brought up about this is that now we're talking about correlation that actually makes sense. Like, what is if you peel back the S&P 500 as a whole, and then you take a look at what makes it up. So again, if you're looking at the kind of the listed charts there, where this got pulled from, Kirk, if I can actually find where we're looking at, it's probably going to be about, let's see here, 1, 2, 3, about 6 or 7, 8 things up. And of course, if you want to give me the right to share, I can share it too. But basically, this is a chart. The chart is basically showing that since basically 2000 to 2004. So this one actually goes back to 1997. And it looks at the 3-month correlation of its returns and how many stocks are advancing. So ideally, you'd like to think that if this is the S&P 500, we would be looking at, ideally, if it's a healthy world that we're living in, you'd be looking at within the 500 stocks in there that they would mostly be advancing. That again, the S&P 500 is going up, and hey, 500 stocks in it are doing fairly well. Now, we've talked about before, the S&P 500 is almost a terrible indication of the gauge of 500. So if you go back to the Dow is 30 stocks, and it is an aggregate of the performance of all 30 of those stocks. So it's taking into consideration everything. It's only 30 stocks. The S&P 500 is aggregated based on the highest momentum or the biggest performance movements of the stocks in there. So the S&P 500 has been heavily correlated to tech over the last 10 years or so, especially as we talk about the Magnificent Seven. If you look at, the top performers, it was basically 9 out of the top 10 were tech, and then add in Berkshire Hathaway for much of the time. But what they're showing here is that, and if you look at the correlation amongst, across the board between, say, 97 to 99, and then you get into, the mid 2002 all the way really about to 2008, there's some little spikes in there, but kind of seeing a correlation averaging around 0.95 of the, stocks advancing within the S&P 500. And again, if you understand correlation, a 1 means that they are in lockstep. Basically, what we're seeing is a little bit of a chart crime again, because this isn't the first time we've seen this, and they're trying to show you, hey, look what I would call this a major chart crime. They're trying to show you this has never been seen before, and they're showing you 2000 and what happened at the implosion of the dot-com bubble, and then they're conveniently showing you basically 2022 to present and seeing this big drop off in the number of stocks advancing. Now, never been seen before is a little bit of a head scratcher, because they are showing, hey, look where it went from 0.95 to 0.2. And they're showing you 2000 to 2002. And for a brief moment there, yes, it did kind of touch the same, 0.69 correlation. But we've seen a lot of times where there's been, drops in that correlation, down below, even below 0.8. So yeah, it has dropped a little bit lower. Is this an indicator that this absolutely has never been seen before? Well, no, because they're showing you multiple times it has been seen before, including 2000, right? But I think that there is something to be gleaned from this in the fact that I think from, whether this chart is actually accurate or not, we are seeing that, and we've talked about this for the last couple of weeks, Kirk, that inside the S&P 500, there's a saying by a gentleman that some of you have heard of, named Berkshire Hathaway. You don't know who's swimming naked till the tide rolls out. Well, the tide has rolled out a little bit, and there's a lot of companies within the S&P 500 where they're swimming naked. Okay, they are basically in there, and their stocks are not advancing. And I don't think this would be a surprise to anybody when we take a look at really what has been driving the S&P recently. Let's go full circle in our conversation. AI. NVIDIA has been a massive, massive component of the advancement of the S&P 500 as of recent. Microsoft continues to be a major performer. We've seen in terms of their total market cap, it has expanded significantly over the last, over the last 10 years, and it has bounced around in that top three, where other market caps have kind of come and gone up and down. Even Saudi Aramco, it was the number one market cap. It dropped again. We're definitely, again, looking at within the S&P 500, we continue to see a trend where the greatest performance, of performers are really driving the S&P 500. But we're also seeing that the rest of the S&P 500, basically the S&P 492 to 495, they are struggling. Okay. And now, is this a sign that everything is, that everything's coming to an end, that Armageddon's starting? Well, Global Market Investor would love to lead you to believe that, yes, look, 2000 is happening all over again. Is it? Well, it's a prediction.
Probably not.
I don't think so.
Yeah, I'd agree with that. I think as we kind of look at this, I mean, we try to share some of our insights here, but people frequently say the world's coming to an end, and then it doesn't, and then they're like, well, tomorrow it'll come to an end. And there's
Kirk, Harry Dent came out this week and said the world is coming to an end, basically, effectively. I'm not quoting him verbatim. He's done that over and over again, but it hit the news this week that the great Harry Dent says it's all going to crash. And I think he has predicted more crashes probably than the history than anybody else. And he's been right once out of 467 predictions. So
yeah, I think he's called 20 of the last two recessions. So
that's how you say it. Yeah. 20 of the last two recessions. Exactly.
Yeah, good for him. Good for him. Eventually he's right. I want to share a few things here before we kind of wrap it up. Some interesting things I saw. So, yeah, actually, we were talking about NVIDIA earlier, but NVIDIA's CEO, Jensen Huang, he had an advice to students, and I wanted to share it in the interest of Doug being the college expert. His quote is this: "People with high expectations have low resilience, and resilience matters in success. I don't know how to teach it to you except for the fact that I hope suffering happens to you. Greatness comes from character, and character is formed out of people who've suffered. I wish upon you an ample dose of pain and suffering." Now, it's such a great quote, and I think if some old white dude came out and said that, he'd be canceled immediately because somehow that's a racist statement. But that is probably the most true thing that I've heard out of a CEO in the last few years. It's such a insightful statement that, I've certainly learned in my life. Like, we all have our own challenges in our own way, and challenge creates character. There was this old quote from Wall Street at the end of the movie where the old guy pulls Bud Fox aside after he's been caught for insider trading, and he said, man looks into the abyss, nothing looks back at him. That's when a man finds his character. The point being is when you're at when things are at your worst, that's where you find your character. Who are you when things are bad? And if you don't experience bad times, or you don't have the opportunity to experience because everyone's so babied in our culture right now, if you don't experience that, you're never going to find out who you can be. So I thought it was a great quote. Kudos for Jensen for that quote, for teaching students how to actually think. Brilliant quote.
Can I add on to that really quickly?
Yeah.
Because you made a comment, depending on who said it. And it has been stated before. It has been stated in a way that was not as direct and probably not as wouldn't ruffle as many feathers. But during the late rain delay at Wimbledon back in 2007, former champion John McEnroe was asked if his children played tennis, and he responded saying they did, and they were very good at it. But then he was asked if they would make it to stardom. His answer, probably not, because his children suffer from affluenza. And he went on to explain that because they had too much money, lacked motivation, and were not hungry enough to put forth the hours needed to be champions. And I think that, that really is what Jason was trying to say in his speech, is that affluenza will limit can limit, not will, but can limit the ceiling that you're capable of, because as you continue to get more comfortable, there is a driving. So we talk about stress, and there's, the negative stress that people face and the cortisol and what that can do to health. But there is a limited amount of stress that is necessary for the greatest potential opportunities for survival. Okay, that we need to live off of. And we live in a world in which, whether it's because of technology or because of financial means, we do not face the natural forces of stress, the good stress, on a day-to-day basis. And that creates a lot of comfort. And there's a saying that if you talk about someone between comfort and discomfort, they're going to pick comfort. You tell them between stagnancy and growth, they're going to pick growth. It takes discomfort to create growth. But it also, if you translate that, you take that a step further, look at the amount of depression that we have. Look at the amount of stress that we have. Look at how much they've tied back to, and I'm not saying it's bad, but look at the use of, they talk about social media and a lot of the lows and worries that people have out there. The number of people that claim to have anxiety, the number of people that are on different types of, medication. Medications, medications to calm disorders. And a lot of that is another word for this: first world problems. Okay. If you're getting
leaves in the pool.
Say that again.
There's leaves in the pool, Doug.
That's right. There's leaves in the pool. I didn't get my latte fast enough. I am identifying whatever the case is. Okay. The lack of survival-based stress leads to, primitively, the brain creating its own stress for the purposes, for primitive reasons that unfortunately are not life or death. And I think that it's exactly what it's tied to. So if you have those motivating factors of, I don't know how I'm going to pay rent next month. I don't know how I'm going to eat next month. I don't know what I'm going to do to survive. The odds of you, if you take that and you channel it, and you can go a lot of different ways, right? You can turn to a lot of very negative means. A lot of those people under those stress environments can get into drugs and do other things and make really terrible life choices. But those that have channeled that, and it may not always be, legal too. You look at the wheeling and dealing that happens and the crime that happens out there, but some of those people are brilliant in the way that they have manifested ways to survive and created incredible empires. Let's go back to Colombia. I haven't talked about heroin in a while, so let's talk about cocaine today. but basically, I mean, you look at the cartels. I mean, legal or not, they're incredible business people that were driven by fear and survival, and that channeled them into creating something. Now, hopefully your kids, most of the people that you're around are going to channel that in things that create a greater good. But it often is a great catalyst to success, is having that stress of having to survive. Affluenza completely diminishes that.
Yeah, I couldn't agree more, except for the heroin. So
cocaine today. Cocaine.
Yeah, cocaine. Okay, different one, different drug. Yeah, drugs are bad. Okay.
Stay off meth. Don't do meth.
Yeah, don't do meth. All right. So I want to share one thing, and then we're going to wrap it up here as we're getting to the hour. I just wanted to share, because here's another trend that's going on. So there've been some talk lately. I know Powell came out and said a few things, and And the consensus on Wall Street is that, all right, they've got, and they're mincing words with what Powell has been saying, but they basically, the in understanding is, all right, they're going to start dropping rates. Inflation is contained, and we're going to be all set. And we're on our way to 2%. I always laugh because 2% was literally a made up number. It didn't come from math. There's no one's ever explained it. It's just they pulled it out of thin air and said, all right, 2%. So I always find that comical that there's no real reason for the 2%. And if you can find the origin of the 2%, please let me know, because no one's ever explained where it's come from. Now, that being said, there is suggestion that the inflation is moderating, which I would agree. It is definitely under control at the moment. I'm not sure you need to lower rates, because the market, with as of a few days ago, is at all-time highs. So why do you need to lower rates when markets are at all-time highs? To me, that's just ridiculous. You're just asking for an exponential rocket ride to the moon, which ends up in a really bad scenario. So this is the Treasury curve. And if you want to know what's going on and why things are the way they are, like this is what you should be looking at. So basically the curve is, the short term is really high. It's not quite 5.5%. It's right around 5.3, somewhere in that range. But as you go out, it gets a lot lower. It goes into the low fours in the 5-year. But then in the 20-year, it goes up to 4.5, and then it kind of scoots back down. So this is not a normal yield curve. If you look at the black line here, that is more normal. So the more normal curve is on the short end, it's lower and it keeps going up as you further go out. And the further you go out, it keeps going up, but it starts to flatten out as you go out farther. That's a normal yield curve. We have not had that in a while. And if they start lowering rates, that could cause the yield curve to normalize, which could turn into a recession. I don't know why they're going to lower rates. If they do a 25 basis points to coddle people, fine. If Trump comes in, I know he's going to beat Powell up every day about lowering rates, just because that's who he is and that's what he's done before.
And he's a real estate guy. Low rates behooves him.
Yeah. And I mean, all of us, really, if we want real estate, because we will go over real estate next time. We got some updated information on that. But realistically, that's what we can expect from Trump, is he's going to beat them down and lower rates. That's good if you want high stock prices, good if you want high real estate prices. It's not good if you want the healthy economy to remain healthy. Lowering rates will accelerate the decline of our economy and our currency and all of it. So like I said, I'm a little concerned, but I would expect that from him. And frankly, they're going to keep printing money either way, so it really doesn't matter. So let's, in the interest of time here, we'll wrap it up. Doug, take us home here.
Yeah. Oh, good. Goodness gracious. Looks like I lost my backdrop again. I don't know how that keeps happening. So that's the NVIDIA chip. Clearly isn't keeping it up with it. So here's the thing that I want to go back to what we talked about with affluenza really quickly, because I think for people that are looking at, who are saving, who have created wealth, there's an old saying that the first generation makes it, the second generation maintains it, and the third generation destroys it. That roughly 60% of wealth transfers are lost by the second generation, 90% by the third. Okay. This is not all cases. There are plenty of people who have become the second generation and taken wealth to a completely different, new levels of standards. But in many cases, again, that urgency that was created there by the original generation is not there in the second. They may have picked up on some of those values, and by the third, that teaching is gone. So if you're out there and you're thinking about estate planning, which is part of the key components of financial planning, this is something to think about, is how do you control that? Taking that forward to learning a little bit more about, what's important to think about for financial planning and how, learn more from us, is basically there's basically 5 to 6 risks that people face. The question is how much each of these risks impact you: inflation, taxes, mortality, longevity. And then you get into liquidity and you get into tax risk. Those are the 6 main areas. The liquidity one is a really, really important thing, especially with regards to college planning or other major goals. Are you going to have the money you need to be able to afford those things that are going to come to you expectedly, like college or car or house, or unexpectedly like health. And really, what is the impact of each of those 6 areas? So if you want to learn more about how to keep more money for your next generation, to educate them to be, so they can learn about money and not be faced with the woes of affluenza. And ultimately, you do not want to be in a situation where any one of those major risks are going to undo all that you've worked hard for. Then you really need to take, and you have to have a financial assessment to understand how those risks manifest. And for us, if one of those things is thinking about how to pay for college, you need to start getting some information now. Check us out at mergentcollegeadvisors.com, MERGENT, collegeadvisors.com, to learn more information about what college is going to be and how that could impact you and all that you've worked hard for financially.
Great. Thanks, Doug. Really appreciate you coming to the show, sharing your wisdom. And that's the show for this week. Thank you again for joining us, Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and the podcast app of your choosing. You're going to check out the show at moneytreepodcast.com. On the website, you'll have access to the show notes, resources, and the archive shows. Also, we're now on YouTube. Please check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a show rating and comment to the podcast app of your choice. Don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling you products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send an email and express your feelings. If you're seeking financial advice, talk to an oracle, or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do.